Today, I want to share with you a new multi-timeframe analysis on a pair. So I will be taking it and I will be analyzing it from a technical and COT perspective, checking the order flow, and by using the different combinations of COT data and technical analysis, we will be able to understand how we can be capitalizing on the pair. And most importantly, I will try to keep the analysis as educational as possible to show to all of you which are the key elements to implement in your own trading plan and trading strategy. Now, if you're new to the channel, I'm a top author on the TRADINGVIEW platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe and I will see you in the video. Okay, so there are a couple of very interesting pairs that I want to speak about in this video. I want to show you how we will be looking for a potential capitalizing opportunity on them with students next week. And what I also want to share is free education to teach you guys how you're supposed to be looking for a trading opportunity in the market. So the first pair is USD HKD, which is an exotic pair. But just because it is an exotic pair doesn't mean that you can't be looking for a very good probability setup on this pair. Now here we are on the monthly time frame, okay? So these moves here to the upside that you see, these are huge moves to the upside, okay? Big moves, meaning that if you're able, okay, on the 4-hour time frame to find a proper entry from this incredibly strong bottom area, you can be looking at a 1 to 10, 1 to 20, 1 to 30 risk to reward trade to the upside. So on the monthly, we know that each and every time that the market hit this area, it got rejected to the upside, okay? It found extremely strong support here. It found again extremely strong support here, support here, support here, support here. Every time the market hit this area, it found very strong support. So we can expect again the market to be rejected from this zone. However, there is a problem with this area. Why? With this pair actually. What is the problem? Is the spread the problem? No, spread, if you have a good broker, it will be very small. The problem here with this pair is that you have very negative swap to the long side, meaning that if you buy this pair and you're holding a long position on it, you will be charged a lot when it comes to swap. And that can be a problem because very often, as you can see here, this pair, before it creates the bounce away from the support, it needs to create a very strong and long accumulation phase. So that can be a problem. So we have to be very accurate in identifying the area and the moment in which the market will be actually ready to make the move to the upside. But going back to our analysis from the monthly time frame, from here we want to see the market show us a nice push to the upside. We go down on the weekly. What kind of situation we can see on the weekly? Now on the weekly time frame, we can see that at the moment everything is still pushing to the downside. The market already tried to reject the area here, but got again pushed to the downside, meaning that the accumulation is still not over because banks and hedge funds are continuing to push this pair to the downside inside of this extremely strong demand area. So the accumulation is still going. We go down on the daily time frame and what we can see on the daily. Now on the daily time frame is easier to understand when there is the possibility to be looking for a potential setup on this pair. Why? Because the structure from a daily perspective is pretty clear, okay? Look, we have previous resistance here, again turned resistance here, the market broke it to the upside, turned support, broke it back down, turned resistance here. Plus, the market has created this M formation. After an M formation, you want to see the move to the upside, but the move to the upside will lead inside of this resistance, okay? Very important to say this. Now, if we go and see what we have from a COT perspective, so commitment of traders, what big banks and institutions are currently doing from a USD perspective, but most importantly, it would be great to see what they have from an HKD perspective. However, we don't have it here in our COT charts. So what we can see only from a USD perspective is currently we are sitting at 4.6k net positions, which is one of the lowest levels that we had in the past. We were sitting here at 25K. Now we're sitting at 4K. However, the hedge funds have already started to add some longs, but anyway, the move to the upside here is mostly given by the shorting on the HKD. So this move to the upside is given by the movement in the HKD strength, not really in the US dollar, even though the US dollar looks bullish on most charts, most other pairs. Now, the way in which you're supposed to be approaching a pair like this is pretty simple. You know that you have resistance here, you know that you have an formation, and you know that you don't want to be looking for a long until we are below this structure level. So below this previous support, now turned resistance. So in which way we will be approaching this with students? We will be waiting for the market to break above this level. So to break above this previous support here, that is turned resistance here. But if the market will break it to the upside, it will be turned again support at this area. So we will have extremely strong support on the monthly and strong support also on the daily. So after the break on the retracement back inside of the zone, what we will be doing with students? We will be monitoring price action from a 4-hour perspective inside of this previous support here, turn resistance, and again support here. So after the break and the impulse to the upside, it breaks structure on the retracement inside of the previous resistance turn support, we will be monitoring price action on the 4-hour time frame with students, waiting for the market to provide to us one of our valid entries. We will also have the confluence of the Fibonacci taken on the impulse inside of this area, 50% or 61.8 retracement. Everything creating a confluence of support inside of this area, and as soon as the market will provide to us one of our valid entries, we will be taking a very nice long with a good risk to reward and good probabilities for a huge move to the upside on this pair, and a very good risk to reward. Definitely a pair to follow. The next one that I want to speak about is GBP Turkish Lira. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. Now, the reason for which I want to speak about GBP Turkish Lira is because it is a very, very interesting pair to follow for next week and also the following weeks. Because what kind of situation do we currently have on it? Now, from a monthly point of view, okay, both GBP Turkish Lira and Euro Turkish Lira are showing a very similar setup. But here, let's speak about GBP Turkish Lira. Now, on the monthly time frame, we have this very nice W formation. Now, as you know, after a W formation, what do you want to see? You want to see the market make a pullback back to the neckline of the W formation. So create a retracement from this impulse to the upside. Specifically, if you have an impulse in the market and you want to measure the retracement, where are you supposed to be taking your Fibonacci? From the low to the high of the impulse, which in this case gives you two targets in mind, a target at the 0.382 and a target at the 50%, which are both lining up with the neckline of the W formation on the monthly. We go down on the weekly, and what kind of situation we can see on the weekly time frame? We can see that on the weekly situation is very, very interesting. In this move to the upside, okay, in this impulse here, there's one candle which is not related to the move to the upside, which is this red candle here. Now, this red candle here, since the market has broken the zone to the downside and has gone for a retest, is obviously acting as a strong supply area for this market. And in fact, when the market has gone to retest it, it has already rejected its zone to the downside. So we have an impulse breaking a supply area, which is obviously now acting as resistance, and we can expect the continuation to the downside and completion of this impulse correction and impulse pattern to the downside. So on the monthly and weekly, everything is indicating for a move to the downside. Now, since on the weekly we have such a clear impulse and correction, we know that to measure our target to the downside, to be more accurate, we can actually use this weekly retracement. Now, if you remember, if we want informations on our retracement in the market, what are we supposed to be doing? Taking our Fibonacci from the high to the low of the impulse. And in fact, we can see that the market has retraced to the 50%. But remember, if you want information on the retracement, you take it on the impulse. But if we want information on the next impulse, so to identify a target to the downside, we have to take it on the retracement. So in this case, from the high to the low of the retracement, depending if you use the minus 0.272 or the plus 0.272. In my case, I use the minus 0.272. It's exactly the same thing, but I have to take it from the high to the low of the retracement, and I will have a very accurate target to the downside at the minus 0.272. So I know here where is my target to the downside for this pair for the creation of this M formation. Perfect. Monthly, weekly, both showing a nice move to the downside. I have my downside target for the pair. Let's go and see what we have from a COT perspective on the pound. Now on the pound, we can see that currently we are sitting at minus 24k net positions, and we had here plus 35k net positions, meaning that from a hedge fund perspective, we went from having way more longs than shorts to having way more shorts than longs. And in fact, we currently have 52k shorts and 28k longs respectively, one of the highest numbers that we had in the past and one of the lowest numbers that we had. So a lot of shorts getting added on the pound, definitely good confluence since hedge funds are shorting the pound. So we definitely want to see this move to the downside. However, as usual, trading is reactive and not predictive. In fact, if we go down on the daily time frame, it's extremely clear what we have to be looking at. We know that we have monthly and weekly absolutely bearish with this target to the downside. However, on the daily time frame, there is one problem. We clearly can identify that here from a daily point of view, we have this previous resistance here, which is now turned support at this area. And by the way, I said point of view. Usually I say perspective, I said point of view, so I'm getting better at this. So here we have this previous resistance now turned support at this area. Now, if you want to be looking for a short, because on the monthly and weekly, there is a clear indication for a move to the downside. Can you be looking at a short if on the daily you have clear support? It's never a good idea to be shorting at daily support, okay? Never a good idea. So in order for us to be looking for this potential sell, we have to first see the market break from a daily point of view, this previous resistance now turned support. So if the market will actually manage to create a daily close below this structure, then on the retest of the area, that is where you will have the best probabilities, and that is the best zone to be monitoring for the possible continuation to the downside. So how we will be approaching this with students: if the market will manage to break this zone to the downside, then after the retracement, then we will be monitoring price action on the 4 hours inside of this area, waiting for the market to provide to us one overvalued entries. And as soon as the market will provide to us one overvalued entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside, creation of the lower low on the weekly, completion of the monthly W formation, and for the market to hit our downside target that we have already identified. But first, we need to see the break below the structure, because at the moment the market can easily just bounce away this area, okay? Easily. Because previous daily resistance turn support is a very strong level in the market. So as usual, being reactive and not predictive. The market can easily bounce away from here, but if it will actually manage to break below the area, then everything combines for the move to the downside, and at that point we will be looking for the potential sell. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. The link is in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as answering every single question that you have every day. So it's a very complete program. I suggest you go and check it out. The link is in the description, and I will see you in.